All right, welcome one, welcome all of you great aspiring future traders of the world. I want to welcome you to today's session, a special welcome for all of the YouTube viewers who are joining in on social media. Thank you very much for this opportunity. I hope you guys stick around with us for the remainder of the session. Every day that the markets are open, we are here live with sessions in the beginner room and the advanced room, talking about strategies, talking about setups, making trades. So if you're really looking to take your game to the next level, start by visiting xm.com and get yourself in these live sessions, a whole host of instructors all day live. And with me is my esteemed colleague. Can I call you? I shouldn't call you a colleague. Can I call you esteemed partner?
I don't know. I don't know. You
Esteemed
have to make a
wife?
decision
If you're
now.
tuning in, this is the Rumors. We are a husband and wife team. Sometimes the word team is subject to interpretation. We don't always work together as a team. But well, let's go with that. How are you doing, Mrs. Sylvia Bellrock
I'm doing
in
good,
Las
doing good.
Vegas?
You forgot to say.
The NASDAQ queen. What did I
Well,
forget to
thank you.
say?
I'm doing good. You forgot to say we're also a professional correction catchers.
That's right, professional correction catchers. Because yeah. Referring to the statistic that yesterday was the first time the S&P had pulled back 2% for 356 days. It's hard to believe, right? Like how we were always talking about how bullish the market is overall.
Yeah.
356 days. That's trading sessions, by the way. So that's going to be well over a year and a half since the 2022.
Yeah.
And we were long. We were actually long the NASDAQ on the biggest correction, 356 days. It's like sometimes you find yourself in you're not. There's an old song you wouldn't know of since you're new to American culture, but from the Talking Heads, it's like, "How did I get this place? How did I get here?" That's gonna be my quote for today.
I know. That's
Anyway, take the floor, teach the people, let them know what to do. You're the market cycle queen. Tell them about market cycles, what to expect, where we go. There's all kinds of bottom callers out there. You think we hit a bottom here?
I see here we had a few viewers. Siko, welcome to the session. Good afternoon to you from South Africa.
Correct.
And
Correctional officers. I like that. We're the correctional
Mrs.
officers
Sylvia
today.
and what happened your date though? Noma is here. And one deal correction
Yes,
officers. Yeah, that is right.
that's better. And it was also, on the side, a little personal info. It was our anniversary
That
yesterday.
is right.
So,
A sad
we
day for you.
both got steamrolled by the NASDAQ on our anniversary. We actually closed our position via the phone while we were eating.
That is true.
Eating out. Welcome to the new age, but hey, another day, another dollar. What do you? Let's try to move on and figure out what we're going to go. I'm going to say, since you're the market cycle queen, this is not a bounceable market right now. It's super ugly. We're here in the morning, been up for a couple hours. We just continue to migrate towards the lows.
Yeah.
So
I don't think
that's
it's
that,
ready, by
right?
the way. I think it has some issues to bounce. And this is the point why I keep talking so much about these cycles. I mean, it could bounce probably today a little bit, but the thing is, when you think it's ready and you think, oh, that's a dip, three red candles, let me buy it. I think it's okay to try it. Like we tried that too, but that's not, there are no buyers at this point. Everyone is selling, there are no buyers, no interest. That's why sometimes it's easier in the stock market to actually chase. If it continues to go up a little bit, you chase a little bit because it keeps going up. There are more buyers involved, more people willing to put their money and buy stocks. Right now, there are no buyers at this point. If you look at the 1 hour chart, I don't know, this is probably the 5 minute chart. It keeps just going
No,
down.
that was actually the daily. That was actually the daily. I fooled you on that one.
No, let me see. And then it keeps going, lower and lower. There is no, also in the lower time frame, no higher highs, higher lows, nothing. It was a fake green candle, obviously, hindsight. And of course, I did not expect this to happen. I didn't expect this huge of a dump yesterday. I thought it's gonna chop around, go sideways a little bit, but it really dumped really hard yesterday. So yeah, maybe today, but I want to see one green candle at least on the 1 hour, maybe even on the 4 hour chart. So that's not enough what we see here for me to jump in long at this point. And by the way, Siko is asking about gold. I can figure out gold. If you want, let's check this out. Gold and oil is the easiest
just
asset to trade with good
one more thing. Like that was the, there's always, even on a downtrend, there's always a bounce. There's always an attempt to try to rally a market. That's naturally what they do. But you'll see in a rare case yesterday, there was like zero. I mean, like nothing, not a single. That's rare. That's very rare. And I don't think that's something that we correct. So let's try this. Gold confusing people, things confusing people, trades confusing people. That's kind of normal, guys. There's going to be times where you just don't have the edge with the market. No matter how long you trade, how long you do this, 20 years, 30 years, there's going to be times you wake up and you just don't gel well. So remember this, the market cycle queen is with us. She can correct me if I'm wrong in this statement.
It's the cycle, yeah.
But distribution, like look at gold. You are distributing.
That's right.
You are sell side. I don't want to say it's bearish because overall it's bullish, but you're in a sell side market, a distribution market, or a backside market, whatever slang you want to use. But let's just say sell side, which means sellers are extremely dominant, not just like partially dominant. Just like look how big and robust these candles are. So what's happening is every single rally is going to get jammed. And you're getting into a point when these happen like this. The difference between bull and bear and sell side and buy side is when you get in the sell side, people start to panic and they get super emotional. And your technicals just become trash. Like people aren't even looking at technicals. Like I'd say everybody that sold yesterday stopped looking at charts and was looking at P&L and said, I'm out.
Yeah.
I'm out. Max losses getting hit. They're not even, we're done with charts. So that's kind of where in these cycles, you start to get so emotional that no one's really thinking about the 50-day moving average, the 100-day. They're just plowing through everything. So long story short, I would sell every rally on this gold right now. You got a massive reversal until it would make an intraday higher high, higher low. I would pick any rally like this to short into every rally, every peak. And I would only change my mind if you had a higher low followed by a higher high, then maybe a dip. We'll look for a deeper area, maybe here. That might be a good spot right there. Let me put a line on it right there. But I wouldn't tangle with this long right now. I would try to stay on the short side of rallies. I wouldn't shorten the whole either because, again, these markets are so aggressive. That'd just rip right back up here on you in a few minutes.
Yeah, and to explain again this distribution, so it doesn't really necessarily means that it's super bearish. It means just that you have, I like calling it like between a fight between bulls and bears or buyers and sellers. You don't know who is going to take control. That's why the changes are so radical. Like it's not straight in an uptrend. You know who is in control. In a downtrend, are the sellers in control. In an uptrend, are the buyers. In a distribution, you have like big ranges, big green, big red, failed breakouts, failed bounces. So a lot of like inconsistent behavior in both directions, to the upside and to the downside. And you don't really have like a clear sign who is going to take control, because just a few days ago, everything looked extremely bullish. Like I even longed it. I got a very nice long there from the bottom and timed it very nicely. But I closed at the top. And again, that's why it's so important to figure out what is the current cycle, because your overall strategy is going to change. You can't just trade the same way, in each environment. Like, for example, in a distribution, it's still a sideways market. It's just more volatile in both directions, to the upside and to the downside. It looks like on one hand, it looks like it's going to break out, going to go up, And the next thing you know, it drops like stone a few candles. That's exactly what it is doing. And if that's confusing you, that's nothing to, to worry about. That's how distribution behaves. It's gonna be always like that. The point here is you must recognize that and know how to trade it. So you can still trade if you buy at the very lows. I'm talking about the daily chart. At the very lows, you buy the dip and close at the top. That's exactly what I did. You could have also shorted. I personally didn't short because I thought this is going to break out. It looked very, very bullish, but there was a short setup. You could have shorted. You had actually 3 days an opportunity to short. So you can trade that, but you have to be very quick with your stop losses. You have to be very precise with your entries. It's not so easy like just buying the dip or in a trending market. That's the point.
Yeah, this is not a. You can see you blew through support and you have really a lack of interest. Another way to do it is like measure these moves. You'll see like the depth of this rally was about $10, 2366 to 2376. Depth of this rally right here was 2371 to 2382. That's about $11. I would look for roughly a $10 spike. That'd take you right back up to here and try to sit on the short side of this gold. But just remember this, like first rule, you got to be a little bit more cautious with risk in a market like this. Like you can't short this down here either. The spike could be too violent. You got to go the other way. So
Yeah, that's true.
if you're going to buy the dip, you're going to buy the dip. That's a scalp. That's all there is to it. So I would use that. Like if you buy that, you get $5-6. You better get out of that thing because chances are they're going to sell the rally. If you were mistaken, there'll be another entry. The better trade that you can get a little more size on and be a little more patient is selling into the rally. That $10 spike, you can probably catch a bigger move. So I'd start with that, scalping out longs, which is going to be a harder trade. That's a contrarian trade there. It's going to be a little bit more difficult to pull off.
Yeah, definitely. We have here.
I mean, I find that to be an easy read. It's getting plastered. Like, look what happened here.
Yeah.
And you got the same thing happening here. So you're probably going to get another one of those deals.
Yeah, it
Go
looks
ahead.
like that. So, by the way, we have a few questions here, or comments. Norma was saying that gold and oil is the easiest asset to trade if you got good equity, like many months, sometime years, no stop loss hit from you. That's very good. Yeah, you have to master some instruments, that's right. And life is going to get actually easier for you. Because if you're trying to be good with all instruments, that makes it a little harder, for trading. So you really have to try to master one instrument if possible. Danushka is here. Welcome. And what else? Let me see if I missed something. Yeah, Noma is the structural daily move, possible 7 red day candle minimum. If this complete, then another 7 days drop possible. If it breaks 2,340, then 2,278 until 2,230. Exactly. So it's all about levels, like Doug already explained and mentioned as well. You have like the support zones, and they're zones of, supply and demand, if you want to call them. And then, you have to just follow the price action. Is the price stopping there? Are the buyers stepping in? That's going to show up if you see some kind of a reversal candles, bullish engulfing, all these things. Or is it continuing to drop and you have inside bars and there's not enough? So you have to pretty much like observe the price action. Okay, Danushka is saying, I'm very close to stopped out on Nike. I'm afraid that it will open with a gap down. Yeah, the market is super bearish, guys. It's very, very difficult to hold longs right now. I don't have right now at this moment on my main accounts that I trade, I don't have any long positions. I got stopped out on the Nasdaq yesterday, and I don't have any stocks. It's turning around. If I start seeing some more buyers stepping in, I might start longing, but right now you're better off trying to find something else. Maybe even the indices, because individual stocks are gonna suffer.
Yeah, another way to look at that is every time you get a beat down like this, just take a look at what happens. You spend about a week trapped inside of a range. I would say you may settle in around here, and you'll probably pull this maneuver for a week, and then it'll make a clear direction. But it's the same thing here. You're just like here we are